Poet Technologies is trending after announcing a recent direct offering, a development that has sparked active debate but is being largely framed by the community as a deliberate and strategic capital raise, rather than a sign of weakness. Many investors believe the company is positioning itself financially to scale production and execution ahead of what is widely expected to be an AI driven optical supercycle. Community discussions suggest the capital is intended to support manufacturing readiness, supply chain expansion, and customer qualification, all of which are critical as optical interconnect demand accelerates across AI data centers and advanced networking platforms. Rather than reacting negatively to dilution, a sizable portion of shareholders view the move as Poet ensuring it has the balance sheet strength to meet anticipated customer orders and deployment timelines. Optimism is being reinforced by recent technology awards and industry recognition, which investors see as third party validation of Poet's high density, low power optical interposer platform. In parallel, confirmed partnerships with established industry players continue to strengthen the narrative that Poet solutions are transitioning from development into commercial relevance. Attention is now firmly on upcoming announcements from major customers, with speculation that purchase orders, design wins, or production milestones could follow. Many believe these disclosures could serve as the inflection point that shifts market perception from future potential to revenue backed execution. Overall, the prevailing sentiment is that the direct offering represents a necessary step toward meaningful commercialization, giving Poet the resources to capitalize on long term structural demand in AI, data center interconnects, and photonics. While short term price volatility remains a concern for some, the broader investor base increasingly views the move as a foundation for sustained growth, rather than a setback.
Okay, so the stock is down 13.6%. This is Thursday, the 22nd of January 2026. Volume is 8.8 million. It has surpassed its 50-day average of roughly 8 million. Hard to borrow as well, but borrow rate is not doesn't no rate, but just hard to borrow. Short interest is around 11%. Underlying trend strongly bullish. Given this weakness that we are looking at right now, lower prices are expected to keep playing out up till the 18th of February. No guarantee that that will be the case. Okay, maybe after that they might attempt to bounce, and then before the let's see now before Tuesday the 27th, the 40-day moving average is expected to attempt to constrain the contraction that is currently playing out by trying to tighten the space that the stock is going to be trading within. Okay, all in a bid to see if a contraction will play out. It's a contraction is playing out, but it's just trying to reinforce that, as in trying to in the case of the 40-day moving average, trying to minimize the contraction. So all in all, it's indicating that it might contraction will still proceed, but it's attempting to constrain it. Okay, projections are saying 8.28, 9.08, 9.57 on this daily charts, and momentum has since started to decline from the 16th of January and is expected to maintain that weakness up till the 4th of February. Okay. Let's see. We have been able to gather the data from this daily chart and indeed some of the data on the 1 hour chart, and they're all here on Claude. Yes, as you can see, the stock is down, so it's trading at a discount to its 10 and 21 period movement, 10 and 21 day moving averages. So positions opened from 21 to 10 days ago are currently not in profit. The ones opened from 40 to 200 days ago and beyond are in profit. Okay, so we also have the price pressure momentum indicators. They are aligned with the moving averages. Okay, we have obviously 10, 21, 40 and 200 day moving averages. So the price pressure momentums measure the angle of attack, if you like, the pace at which the stock is appreciating or depreciating. So the 10-day moving average is dropping at a pace of 31 cents every day. Is if you like, theoretical, yeah, going by what's going on. It's just a theoretical indication of what is going on. It doesn't mean that may be the case, because the stock can, some positive news can come out and everything will be reversed. So as it is, that's what it's indicating. So but the 21-day moving average is actually still trending, still gaining 30 cents every day. And all the other moving averages, as you can see, the one with the strongest trend is the 40-day moving average. Okay, we also have the market grid. The market grid gives us a range of possible prices, and here we have here the 1 hour market grid, which is a lot more pertinent in the sense that it gives us it has reacted to what is going on, whereas the daily chart here, the daily market grid, it hasn't really reacted to what is going on. So that's why we have the both of them here. Current price is now 7.17, even though I have it here 7.28. So what the probabilities are indicating that uh, for it to advance 7.26, it's going to be a 75% probability. Okay, and we have these. Yeah, so you can always pause and read. So let's see now. In the case of the daily chart, these are the probabilities as well. Okay, and this is a trade setup, not a recommendation. If you try it, you might lose money. Okay, so there's a primary entry will be around where it is right now, between 7.15 to 7.25. Yeah, confirmation price holds above 7.13 on closing basis. Okay, risk level high, post capitulation volatility, and your targets will be 7.63, 7.89, 8.14. Stop loss will be 6.95. Success probability 50 to 55 to 60%. Rationale is extreme single day drop often produces short term oversold bounce, especially when intermediate slash long term structure remains intact. The gap between current price of 7.14 and the 3-day extrapolation of 7.96 suggests algorithmic mean reversion probability. Okay, long term setup. Okay, bullish continuation, primary 50% probability. Okay, wait for successful reclaim of 7.76, the 10-day moving average, and daily close above 7.89. Okay, yeah, entry will be 7.95 to 8.15. Your target will be 8.2, 9.08, 9.57. Okay, so deeper correction. Okay, if price breaks below 6.67, wait for stabilization and reversal confirmation at 6.4 to 6.67. Okay, so your target will now be 7.38, 7.76, and 8.6. Risk factors, volatility spike, some 13% single day drop indicates elevated uncertainty. Position sizing should be reduced to 30 to 50%. Negative price pressure momentum, short term momentum has broken, requires patience for reversal confirmation. Moving average compression, price now sandwiched between the 10 and the 21-day moving averages, choppy action likely. Volume context 2.9. Okay, volume is now 9.18 million. On the collapse, need to see volume diminish or further downside capitulation sign or expand on upside accumulation. Okay, probabilities of next 5 sessions. Yeah, next 20 sessions. Those are the probabilities. So, recommended action approach: wait for short-term stabilization, 1 to 3 sessions before initiating mean reversion trade for long-term positioning. Require long-term positioning require clear price pressure momentum reversal and a 10-day moving average reclaim before committing capital. The strong price pressure momentum on its 40-day moving average provides a structural bullish bias, but immediate technical damage needs repair first. Okay, so that's what's going on right now. Just see what you make of POET, and thank you very much for watching this video.